Hello guys, thanks for tuning back to Crypto Mainly. My name's Lee. Just did recorded a 27-minute video for you, only to find that I've been sat on the microphone the whole time, so I'm going to have another go. So this may be a little bit more polished. I'm going to try and keep it brief. I just did a really long video and waffling too much, but let's just try and keep this one nice and brief. Firstly, guys, thanks very much for helping me like and share and repost my latest video. It's got 6,475 views, you can see there, which is incredible. That's the most views that I've ever had on any of my videos, and obviously mostly that was people viewing on Twitter. So that was great. Thank you very much for that, guys. So let's have a look at what's going on in the market. Okay, so we've got a fear and greed index down at 30, incredibly, when it was at 74 last week. So let's just have a quick look what that means on the chart. Just show you here. So we've got fear and greed index here. We're all the way down at 30. The last time that we were at 30 was actually all the way back here, which was the 11th to 12th September 2023. Okay, let's just mark that on the chart. Hello. Let's just mark that on the chart. Okay, we go back to where we like to see where that was, and as you can see, guys, it was actually got a local bottom following this corrective move here. Very similar, actually. This structure here is very similar to what we've got now. You've got highs here, and then you've got some high highs, and then we've come back down, which is interesting. We've got that's quite a similar structure there. But I thought that was a point of interest anyway, guys. Let's just get rid of that for you. Okay, lots to talk about. I'm going to try and keep it video to less than a ridiculous amount of time today. So let's have a look. So just a couple of things I've noticed here, guys. This 1, 2, 3 is basically you can see that this area of support here, this blue support bar, this is on a daily time frame, has been something which we've bounced from this blue support, in quite spectacular form in the past few times, and we've come back down. We've got a nice large wick here at the bottom, which we've seen before here. I actually think, guys, there's quite a lot of liquidity around about the sort of 65,000 mark. So what I think is going to happen is we're going to probably see. So I think we're going to see something like this, where we come up, we test this area here, and we'll probably get a stab down into this area down the bottom here. Okay, now the reason I say that is because I think that that's where we're probably going to end up creating a lot more liquidity. So we'll come up and we'll grab the 65k liquidity. We'll come back down. Everybody and their wives will all be shouting that we're going to be going lower and lower and lower here. And it is a possibility, guys. I mean, the trouble is that market sentiment, if everyone starts to, see the same thing, that it could lead to continuation to the downside. And this is very, very risky territory here. But I can see the way that the market works. It wouldn't surprise me. We come up, we grab the 65,000 liquidity. We come back down. There's a huge amount of liquidity then created in sort of this vicinity above this support, which then we then bounce hugely, and then take out all this liquidity and then go after all that liquidity that's around 72 to 75,000 at the top there, and then we create a new new all-time highs and off to the races from there. But I'm just going to show you something as well, guys. Rid of those drawings. Something that we've been watching in the group for a while in my group. So we're just going to show you this this channel here, something which we've been watching for a while, so it won't be any surprise to you guys. But this is obviously this is a bull flag. It still is a bull flag. We've got a couple of little discrepancies with some wicks and things, but you can see the main one here. I did show this in my group as well, which is what I think is happening here, which is an expanding flat. Okay, so you've got 0.1 at the top here, and then you've got A, which is going to be this one. Okay, this point here is here. Okay, so we've come up, and this point here, B, is obviously this area here. Okay, normally you'd expect it to see a little bit higher. This point here to be a little bit higher than that one. It didn't quite happen, but it is a very similar, it's comparable. So it's still what they call a flat. Okay, and then the expanding flat comes when we come down here. So you could see that you've got an expansion from, say, from here to there. That's an expansion, and you would then see the expansion would then be from from here. So you've got an expanding flat scenario which is breaking out if indeed we bounce and come up and break out and carry on to the upside. So let's just get those. So I think that's actually what's happening, guys, at the moment. Particularly based on the fact that if this does turn out to be a bull flag, I'll just move this out of the way. Okay, we've then got, we can then formulate a measured move as to where this price would likely be if we do get a breakout. So let's say price comes up, as I say, guys, I think we are going to end up down here. Okay, I do think that this is classic bear trap territory. Okay, so don't forget that, guys, please. I do think we're going to come up, come down, and then we're going to head up. Okay, something like that. Okay, I could be wrong, guys. Just my opinion. Okay, I'm not a financial advisor, as always. So please, do your own research and things. But I'm just going to tell you what I can see. The measured move. If we come up and break these, this level here. Come up. Sorry, guys. We come up and break, break this level here. Then what we'll see, the measured move from the high to the low here. So 0 to 1, 1 to 2 is up at 87,000 up this area here. You can also see, guys, if I just zoom out a little bit, you can see that I've got these two resistance lines up here, and they're based off of the previous market cycle top. Okay, so you can see, probably find. So yeah, so you can see that we've got these two lines that are drawn from the highs of the weekly closes and the highs of the peaks of the weekly wicks. Okay, that's why it looks a little bit skewed. Okay, go back to the daily. Okay, and then you can see quite clearly that why it's significant. The measured move of this breakout would, obviously it would look something like this once we get here. It would look something like this, where if it does come up, comes down, breaks out, and it comes down here, breaks down, then comes up, breaks out, it will come back down to retest, that breakout, and then you would get, the continuation higher, and then you would get your 87,000, which is interesting because it's towards the back end of this year, and that's usually a bullish time in the market. October is usually quite a nice time in the market. October, November, December. Obviously, can be quite good. So, that would make sense to me. I think once we get up here into this territory, then we've got to be really careful. We've got to reevaluate this 87,000. Once we're into that territory, we have got to be really careful then at that point, guys. But we'll see what happens in the market, closer to the time for that. But yeah, this, guys, if you take a screenshot of this, basically, let me just draw that for you again, guys. So, yeah, up, down. Then you're going to get the breakout continuation, something like that, guys. Let me just see when the times are. So we're looking at this dip into this territory down the bottom here, guys. By the way, is going to have to happen quickly. We're going to have to see this dip down in here by, I would say, the beginning of the second week in July, at the latest, which, as you can see, is about the 8th. So you got a relatively small window, but I can see something like this happening where you've got, we're here now. Okay, back here, we're here now. Okay, just bring that across. Yeah, something like this. You see this kind of pattern here where we came down to support, broke down. So this is where we are here. That would make sense. That pop that back there. Yeah, it makes sense that you can see why I'm thinking we're going to get this formation come up against the this sloping resistance lines here, and then reject, and then come down, and then end up down here, create lots of liquidity and the bear trap, and then be off to the races. That would make perfect sense to me. And then when we get up into this area, up into the 85,000s, and everyone's screaming for continuation, everything's going to carry on, and we're going to see those huge numbers, then we'll have to have a look and see what the market's suggesting to us now. The charts will tell us what's going to happen, guys. You don't listen to the news and things and the FUD and everything else, because the charts will tell you what's going to happen. All this Mount Gox things and that, yes, it's created a bit of a correction, but that's just the structure. This structure hasn't changed, and that's the point, really. But so let's just have a look at this chart here. This one, guys, is you know, I think that, just take that off for a second. Okay, just want to show you this one quickly. So this weekly close here, this support is at 61,492, and you can see current price is slightly below that, and you can see that it's battling to keep above it. So at the end of this week, ideally we want to see the price back above 61,492. Okay, this weekly close back above there, and you can see currently it is starting to look like it's trying to hold there. Okay, but I want to show you a couple of things, guys. Let me just have a look at the bull market support band. Just one thing I just wanted to show off a little bit, if you'll allow me to do that. Just wanted to show in the VIP group, if we can have a look, see that the date here is the March the 12th. Okay, and I put the note in the group to say that I've started to take profits on my trading account and set tight stops on the remaining positions. From a risk perspective, I am happy to wait for the Bitcoin correction to shop for the discounts rather than give up profits. I could be wrong, but please be cautious. That was the 12th of March. Just have a quick look on the chart where the 12th of March was on the daily time frame. 12th of March was this candle here, so pretty good call on the top there, guys. I think you'll agree. You know, sorry to sing my own song, but I think sometimes it's worth pointing out that, you know, I do try to warn you. I do try to you know, keep you posted. That was the 12th of March. I'll obviously put this. Please make sure you read the above post. We click on that again, and you can see this was on the 4th of March. Please pay particular attention to this post. If Bitcoin reaches the all-time high, it will very likely break it to fool everyone, consolidate above the all-time high until everyone is long, and then the 25% fraudulent collapse will come and wipe everyone out. End of quarter profit taken towards the end of this month. Okay, it could be wrong. Okay, so it took later than I expected, but that was a pretty good call, I think, and I've managed to protect myself, and I hope you have too. I've mentioned this in the recent videos, so for those of you that have already seen that, please bear with me. You can see, I just want to talk to you about the structure here, guys. Okay, let's talk about the structure of this top here. Okay, what you've got here is, you know, is a very similar scenario that happened here. So let me just show you. I'm just going to change that so you can see. So what you've got here, okay, is an M formation at the top there. Okay, and a similar, although it's not exactly the same, obviously, we've got an M formation here. Okay, that's, I'm sure you'll agree, that's very similar. What you've also got is in this area here, you can see that the green line on the top of the bull market support band is bullish, and it's changed to bearish, okay, here. Okay, and it's actually, if you see that this M that I've drawn at the top here, you can see that the base of the M there is actually just where the cross happened. And interestingly, the wick down base is where, you know, where the cross happened here in a bearish fashion. So as you can see, guys, you know, the lower part of the support, so the green line, which was normally on the top, is now on the bottom. It is flattening off and starting to curl over. Okay, and also the width of these is starting, you know, it's progressively getting wider and wider. Okay, and it's starting to curl over at the top there as well. Okay, let me just see if we can zoom in and I'll show you that a bit more clearly. So you can see how this is flattening off. You can see how it's trying to find support. Okay, let's just talk about that support for a second. So if we go back to this structure here, you've got the M formation at the top. You've got a candle which has come down. It's come down below the central point of the M, which is where we are now, below the central point of the M. You can see that this weekly candle here, right there, it closed and looked like it closed above that green line, and that the green line was acting as support, but it did close inside the bull market support band. So the next week, what happened is, you know, you've got it looked like the bull market support band was providing support, okay, and you got this huge correction. So to give you an idea of what that correction actually looks like, guys, you know, that's a 37% correction on that single candle. So that single candle there, once the bull market support band was lost, it was a sudden and immediate, in the course of 1 week, a 36% correction. Okay, so what would that mean for price action where we are now? Let's just say that we lose the bull market support band. We drop down 36%. You can see that the 36%, you know, it takes us down to this range basically here. Okay, so you've got a wick low here as well, which is obviously going to be, you know, another point of interest at some point in the future by the looks of it. Let's just mark that on there as an extreme. Okay, so it's quite interesting to have that on there as well. But you can see that the measured moves of this M breaking down, you know, what's happened in the past, all of these things are suggesting that the price is going to come down, you know, and have pretty well its first really decent correction. This wasn't really a correction here. This was consolidation. This wasn't a correction here. You know, these are, you know, just basically, you know, all, you know, sort of path of course, just carrying on the bull market. You can see that the bull market support band has been lost already once this cycle, but it didn't, you know, it resolved and didn't really make very much difference. So you can close below the bull market support band. That's not a problem. You know, but I'm just thinking in this area, we need to be very cautious. We are at a point that this is going to be either maximum profit if you were long or maximum profit if you were short. So very, very, you know, we've got to be patient, guys. Literally, we've got to be patient. Okay. Just going to draw up some other indicators, guys, just to give us, see if we can get any other clues. We've spoken about this before. Bearish divergence on RSI. RSI is continuing to the downside and has broken the lows here. Okay, so these lows are broken. RSI is continuing to the downside. Still above 50 on the RSI, so, you know, this is a weekly RSI, by the way, still above 50. So, you know, not the end of the world yet. Below 50, then we'll see that, you know, we'll see something like this. If we get weekly RSI below 50, then we'll likely see something, you know, in relation to something similar to this. So, you know, another suggestion that we may be, you know, we are at a decision point, guys. You know, weekly stochastic RSI has not turned to the upside yet. Okay. And we've also got MACD, which is, you know, accelerating to the downside. Okay. And you've also got that huge divergence there, which is not as easy to see. But you've got a huge divergence here. Okay. So if I can just show you that, I'll show you that in a different way. Okay, so you've got the high of the histogram and you've got the low of the histogram here. Okay, and the highs here are similar height, yet the high and the low, that's a MACD that's a volume divergence. That's very powerful, guys. You can't ignore things like that. If you want to be a successful trader, okay, you know, don't buy into the concept of everything's going to go up forever. It just doesn't happen like that. You know, you need to, you know, make decisions based on what you can see on the charts, and it's quite clear what can be seen. So, guys, I just want to, you know, let's have a look at this chart just to finish off. This is very similar to here. We're going to get some kind of capitulation, I think. It wasn't the end of the world, you know. I don't think it will be. I think if we come down, just as long as we don't break below these lows, start closing below these lows, because that would then see a long bear market. But we're at the wrong point of the cycle for that, guys. This is a mid cycle peak, and you know, I think we're going to have some really nice times, just particularly going into next year. But look at these, guys. Just look at this on a weekly time frame. Okay, even if you go to the daily, okay, stochastic RSI is starting to turn up. Okay, obviously this last candle it is looking like the sell volume is waning, but of course we haven't closed the day yet, so don't be fooled by that just yet. You know, if anything, you know, the MACD is actually, you know, signal line is actually accelerating to the downside. Okay, you've also got the stochastic starting to turn up. That in itself is not necessarily a good sign. That's just a volatility indicator. It could be that we get a huge downside 38% correction over the coming week, and this volatility is actually, you know, because the volatility is picked up because it's been a big downside move. Okay, let me just see if I can find a good example of that for you before. Where are we? So, for example, if we look at there, okay, so you've got stochastic RSI at the bottom turning up, okay, so it's great, looks like it's accelerating to the upside, but all that meant was the volatility was picking up, and the volatility was to the downside, okay, on an exaggerated, you know, but you get the idea. Okay, guys, so don't be fooled by stochastic RSI. It is a momentum indicator. It's very useful, but you know, don't be fooled by the fact that the stochastic RSI is turning up on the day's downside. That just means that whatever direction that we're going in currently, the volatility is about to increase. Okay, so we need to see a bounce here, guys. The long and short of it is, and I don't think that we're going to personally. I'd love to see it happen. I don't think that we will. But let's see what happens. There's a lot of bullish signs on a short term. Okay, a lot of bullish signs. We're still in a bull flag. All those things. What I spoke about. We could come down. We could bounce. But if you look at this overall picture, if in doubt, zoom out. And this picture sort of says it all, really, guys. I don't know what else to say. But guys, protect yourselves. Be careful. Don't. This is a high risk market at the moment. High risk, high reward. Yeah, but I mean, I personally, I'm just going to sit on my hands. This is a weekly chart. We're going to have plenty of opportunity to see what goes on. Even on a daily chart, we're going to have plenty of opportunity to see what goes on. Interestingly, yesterday closed well below the bull market support band. When was the last time that actually happened? Let's have a look. So the last time that it closed for the first time below the bull market support band was all the way back in August 2023. Okay, and then once that had happened, obviously you got this 15% move to the downside, and then we stayed below the bull market support band for, I believe it was 2 months, 60 days before we managed to get back above and break out again. So 2 months, guys. The message is slow down. If we come back down here, we could be 2 months below the bull market support band in this territory, before we make any kind of moves to the upside. So guys, let's just be patient. We're now coming up to test the underside of the bull market support band. I think the warning signs are there, guys, and I hope I've made it clear. Thanks for sticking by with all of the the bad times and things. I do appreciate it, and thanks for listening and follow me and all the support and things. I really appreciate it. Thanks ever so much, guys. Take care, and I'll speak to you again soon.